Indian companies have been making waves in the global market lately, and one such company that stands out is Cochin Shipyard Limited. If you're an investor looking to diversify your portfolio, this company might be worth considering. Cochin Shipyard Limited is a shipbuilding and repair company based in Ernakulam, India. They have been in operation for over 50 years, offering a range of services including aircraft carriers, missile vessels, and offshore structures for various industries. The company has made significant strides in recent times, with increased production volumes and improved efficiency. Their revenue has grown steadily, driven by demand from the Indian government and domestic clients. The stock price has also seen some growth, with investors taking notice of the company's steady performance. One of the key factors that investors are interested in is Cochin Shipyard's return on equity. With a profit margin of 18.37%, it indicates that the company has been able to generate significant profits from its operations. The company's market capitalization is impressive, with over $476 billion, and their dividend yield is respectable at 0.78%. They have also seen an increase in their price-to-book ratio, indicating a strong valuation. Cochin Shipyard Limited's financial performance has been solid, with earnings growth of -2.76% in the latest quarter. This suggests that the company is well positioned to continue its growth trajectory. With a debt-to-equity ratio of 9.49%, investors should be cautious about taking on too much leverage. However, their book value stands at $200.50, indicating a strong balance sheet. In conclusion, Cochin Shipyard Limited is an interesting investment opportunity for those looking to diversify their portfolio. With its solid financial performance and growing revenue, it's worth keeping an eye on this Indian company as it continues to navigate the global market. This is not financial advice. Please do your own research. Use this information at your own risk.